Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. I just finished the week with 15 wins and 4 losses for a win rate of 78.95%. That's slightly below my target goal of 85%. A couple of my losses I've taken were end of the day bad plays. This week was not that bad of a week. It was pretty good considering just the end of the day plays just weren't there. I think I just got on the wrong side of them. But anyways, we'll cover that when we cover Monday. Traded his room. On Monday I said, let's see. Monday was the 23rd, calls over 422, which was right here. No, 423. We was expecting a dead cat bounce, which we did the week before. No, we didn't. No, I was expecting a dead cat bounce because we went from 440 to 425. So I was expecting, this is the day, yeah, I was expecting a dead cat bounce because we went from 440, 437 to 420. So I was expecting a dead cat bounce at least beginning of the week, but we didn't really get it. So I traded his call. I said, what, over 422, which is right here. I got the gap up on Sunday. It started to sell off. I said 422, so I basically went off this support right here, even though I think I called it right around here. So yeah, I rounded up a couple dollars, but it didn't get there. Well, not right off the first 10 minutes, but it did get there eventually. But first 10-minute candle was a red candle. I just didn't want to take puts at lower day. RSI was pretty low. I just did not want to take the chance on grabbing puts. New lower day. I probably could have done that and done pretty good, but I didn't. So the first 10-minute candle was red, and I didn't take new lower day. I waited. So once it broke higher day right here at 420, I grabbed 40 to 42.20 calls at 9:30. And then went from 9:30 to 18:20 if you held all the way through. So that ended up working out. Then I bought puts at 12.19, which is right here. It ranged up. Had this big red candle right here, an engulfing red candle. Then it started to make a new high day. It couldn't. So when it came back below the 422.40 area, I might even grab it underneath the 422.35 area right in here. You get the body, all lining up pretty good. So when it broke below that area, I grabbed puts. I grabbed the 42.30 puts at 720, and they went from 720 to 960. So ended up being a good play. Just remember, take the base hits. Don't go for the home runs. You go for the home runs, you're gonna lose your shirt. Always take the base hits. Take the 50 cents to $1, $2 play, and you'll end up doing pretty good. So you take $1 play at 10 contracts, it's $1,000. Most people don't make $1,000 a day on one play, so just keep that in mind. Then I took calls at 12.28, which was right here. We got this pullback right here, and it got bought up at the 422 area. When it came quickly back to higher day, I switched sides right away because it failed to break it here, and it failed to break down. So when it came back up to higher day, that's when I grabbed calls. I grabbed the 42.45 calls at 670, and then went from 670 to 810 in that little push right there. So it ended up being a good play. Then I took puts at 158, which is right here. I can see why I took it here. We had this massive green candle, dropped right here. Then we had a FU set up kind of right here because you got these big red candles, green candle right there. And I was going to take puts right underneath the wick of this candle because I don't want to take it underneath the body because the body is really, really tiny, only like 10 cents not even 10 cents, like 6 cents. That's not really much to go off from an FU candle. So I was using the wick for the FU, and that's what I did. Right when it got down here, right when it got down close to the wick, it popped up, but it made a lower high, and then it eventually dropped. So I took the 40 puts at 660, and they ended up going to $12. So they ended up being a nice play on that at 158. No, I grabbed it right here. I didn't grab it here. 158. I grabbed it here. Okay. Some reason, okay, maybe I didn't grab it there, but this, for some reason, I thought I did, but no, I didn't. I grabbed it at 158, so I grabbed it at this candle. So if I grabbed it at this candle, I grabbed it at the wick. I grabbed it at the bodies of these candles, not the wick. So maybe I was thinking after you set up, and because it did not break the wick, I didn't grab it. I waited, and when it failed to make a new high a day and it made a new a lower high, it came back down, and it broke below the three bodies of these candles right here. That's when I decided to grab the put. So yeah, I grabbed them right here. So they went from $6.60 to $12 right there. So that was a good call to do that right there. So even though the FU setup was there, it didn't really work out the way I thought it did. And I obviously, if I did grab it right here and it made a lower high, I still probably would have held on to it either way. But I didn't. I grabbed it right here. So, and if I grabbed it here, this is what I saw right there. These three bodies. Also, you can also see a nice little pivot right here because it was rejecting here and supporting right here. Not an exact number. Remember, support resistance is not an exact number. It's an area. I don't like that support and demand bullshit. I know a lot of people use it. I just don't. I'm just old school. It's just people just like to use fancy words and different terminology to make themselves look good, but I don't really care. There's a pivot right there, so I took that. So that's why I took it under that. So on Tuesday, let's see, Tuesday in the trade ideas room, I said SPY calls over 424, which was the day before. Right here. This is pretty much this area right in here. Because what we were right, like say, we were right around 423. So 424, the next round area. Next dollar amount, I didn't want to go 423.50 because it's right there. So when I saw previous day's area right here, that was a good area to go off from. So that's what I did. But this is what's been happening a lot lately. This choppiness the first half an hour. I took puts at 429.46, which was right at new low a day. Of course, it went against me right away. I got the 42.25 puts at 560, and they ended up going to 590. But I actually bought them at 790. I averaged down at 1152, which is right here, 1152, right here. So yeah, I bought it here and it held on to it this entire time. Then there was like a head and shoulders forming at the left, the head right here. So when it failed to break new lower day right here, I saw the head and shoulders starting to form, the second shoulder, and when it decided to break right here, this is when it averaged down and it finally dumped. This was just a very, very annoying trade. And when it does stuff like this, I don't like buying puts here, taking a loss. When it gets to high a day, near high a day, taking calls, because this is the kind of crap that you could take a bunch of losses on. It's easier just to take one side and see what happens than it is to take 2 or 3, maybe even 4 losses, just trying to, because if you took it here, you would have taken a loss. You took a calls up here, you would have taken a loss. If you re-entered the puts down here, you would have taken a loss. If you took calls up here, you would have taken a loss, and you then finally breaks out. But you don't know when it's finally going to break out, which way it's going to go. This is the kind of bullshit you see all the time, almost every morning, a lot of the times. That's why if I have a feeling it's going to go one direction, I'll just stick with it, and I'll either stop out and wait it out, or I'll just hold it and see what happens. And this time I just held it and see what happens. Then I finally averaged down right here, make my new average about 560. In fact, I think the reason I had 790 is I sold some right here. I think I sold some right around 8 something if I went back to look. Yeah, 850 is where I sold some. And I held on a couple. I think I had 2 left over. Then I ended adding 8. That's why my average went from $5 to 560, from 790 to 560 on the $5 ad. So I only had a couple. It wasn't no big deal. And then averaged down and ended up going to 890 overall. Even if I didn't average down, I still would have been able to get out. But just annoying stuff like this is very, very annoying. Then it took what calls at 103, which is right here. Got to 421, got bought. Then when I got over the, let's see, the body, the wick and the body, right over this 421.60 area, that's where I bought calls. I bought the 42.30 calls at 720, and they went to 720 to 1180, so they end up working out pretty good. Then there's a flag right here that takes off more, but I took calls at what? Again, at 227, which is right here. It's exactly what it did right there. So I caught from here to here, then a pullback, made a flag. I tried to break out, but it didn't. And then it pulled back a little bit. Didn't break below. I think I was looking at puts right below the 422 area. Or 422.15, right around this area. It didn't break. Then it decided to break out. No, I'll break out of this flag right here. So once I got over 422.60, that's where I grabbed calls. I grabbed the 42.40 calls at the 42.40 calls at 550, and then went from 550 to 1050. So that ended up working out pretty good. So can't complain about that. Then on to Wednesday, the 5th, 25th. What did I say? SPY calls over 423. I was expecting a dead cat bounce. 423 was this high right here, and I called it right around 9 o'clock. So I was looking at 423. It never did. First 10-minute candle was deep red. I didn't want to take it. Of course, this is the time that I was expecting it to chop, and it had some follow through. So I was kind of annoyed with that crap. Then we had this 10-minute candle right here. So we have a nice little FU setup right here. So once it broke below, I would have used the body because the body of this candle is pretty big on an FU setup. So once it got below 419.65 or even 419.70, I grabbed puts. I grabbed the 41.90 puts at 720, and they went from 720 to 850 right there. This ended up being a good play. Then I took calls at 1039, which is right here. I flushed down, came back up the view up. Once it broke over this 420.21 area, I grabbed calls. I grabbed the 42.25 calls at $6, and they went from $6 to 10.50. So it ended up being a good play. Then I didn't do anything. I took puts at 248, which is right here. This candle. You get the sell off, bounce back up, and it came back down to lower day. I thought for sure we were gonna drop, and so I bought puts right here, and it popped and just stayed in this flag channel and didn't do anything. So I had the 41.85 puts at 680. It bounced, went against me right. I think probably got it just too prematurely by like 10-15 cents. I got it anticipating it was gonna just collapse. It didn't. It got bought. So it just one of those times where you buy in anticipation of something happening and it didn't work. So it does happen. It will happen. So just the way it is. So I had him at 680 and I cut it at 3. So stayed in that bear flag the entire time. So not much I can do about that. Thursday, the trade ideas room, I said 418, which is the day before's flag, because I called it right around here pre-market, and I didn't want to call 417 or 417.50, so 418, next round number up, so I liked that. First 2-minute candle was red. I grabbed calls prematurely up here. First 2-minute candle was red, so I should not even have looked at calls, but for some reason I did. And when it got up, not even high a day, I got it prematurely. I got the 4,200 calls at $8, and I just stopped out. Got 3, so it is what it is. Then I bought puts at 1033, which was right here. You can see the bodies of these candles all lining up right here. So once it broke below that, because I missed this, so when it came up the VWAP rejected, I grabbed puts right here. I grabbed the 4140 puts at 610. I did sell some at 7. I remember looking at my notes and seeing that, and I held like I didn't sell all of it. I sold like 8. I kept 2. Then it popped, and when it popped, I decided to average down on the last 2 I had, because SPY has just been hammering on the pops. Anytime it pops, it just gets hammered on. So up here, I added more at 250, make my average 325, and then went from the rest went from my 325 average to 620. So that ended up being a good add and good play, even though I sold some here, added more, and sold there. So that worked out. Then I bought calls at 102, which is right here. You see it drop down, pop back up. I bought the 4145 call, so I bought it over the body of these candles right here, over 413. Bought them at 750, and they went from 750 to 860. So I got a little bit of a pop, not too much. Then it came back down, it flushed out. So this is what you got to look out for. They're trying to get bait in longs right here. Then when they bait in longs, they come down and they flush it to new lower day to take out the stops. Because if you went long right here and you didn't take your money and get out, like I always tell you to, and you held for a bigger run, and most people's stops are going to be new lower day, which it did. Hit new lower day, took out the stops, then it ran. They do this all the time. You got to watch out for that. So I took calls again at 142 right here. So we took this play right here, saw this, and we took it again right here. And this time we took the 4145 calls at 750, and they went from 750 to wait a minute. I took the 4145 calls right here. Okay, this time I took the 4140 calls at 840. Okay, this one's 840. I took the 142. Yep, that's right. 4140 calls went from 840 to 1250 right there. So yeah, we caught this play, saw this, and caught it right here, and caught that. So that ended up being a good play. Then I took puts at 348. I don't know why, but I took it right down here, thinking that because we are up here, another push that got hammered on. I probably should not have taken this. We were really not at new lower day. I was thinking, okay, maybe if we down here at the 412 area, we're going to push for new lower day, and we didn't. So I got the 4135 puts at $3. Took an end of the day gamble, and it didn't work out. So yeah, that's just one of the end of the day plays that kind of messed me up. So it is what it is, and Friday's end of the day play messed me up. So Friday, I traded his room over, let's see, SPY calls over 415.50, which is right 415 up to the nearest 50 cents. I don't know if there was anything the day before. Yeah, right here, this area right in here where it rejected. But first 10 minute candle was red. This time I took, no, I didn't take this either. I waited. Okay, so I didn't take that follow through, but I waited and took puts at 10 o'clock, which was right here. I didn't take that. It came back down. There was 10 o'clock news. I think it was consumer sentiment. So it started to pop, and then once it came back down below the 412.80 area or 85 area, I took puts. I took the 4125 puts at 810. They went from 810 to 940 right there. So that ended up being a good play. Then I took them again at 1219. Which is right 1019, which is right here. So yeah, I caught it here. I bounced up and came back down. So when it came back down right here, I grabbed it again. Same ones, 4125 at 680 this time. And they went from 680 to 1020, and that drop right there below the PDC, which is the white line, previous day's close. Then it took calls at 108, which is where? Right here? Right here. And the reason I took that is this 410.50 area. If you look at the daily or even the weekly, it's a major area. So I went in catching the knife, thinking that this is a huge area on the weekly and daily that algos were going to jump in. So I grabbed the 4125 calls, caught the knife at 690, and they went from 690 to 830. And then I grabbed the calls again at 128, which is right here. I grabbed them again. I reloaded one at 128. So yeah, I caught it here, got that. When it came back down, I reloaded, thinking the same exact thing, that the algos were going to jump in and we were going to have a massive end of the day push. So didn't another failed end of the day push on that one. So the last on Thursday I was looking for a dump, but this time I was looking for a push. I was looking for a push that we were going to get a massive, because algo should have jumped in after being so oversold, that we should have had a strong push to 413, 414, even 415. Because usually when you have a significant area like this, algos will pile in and start buying it, and you'll see a massive pop out of nowhere. And I think maybe a lot of other people saw that. It might have been one of those things where it's one of those areas that everybody saw was pretty, what do you want to call it, significant and predictable, that everyone, it was a no-brainer for everyone, and maybe that's why market makers did not pop it and decided just to let retail try to like front run it and just slap them in the face, which they did, and that's what ended up happening. So so yeah, that's what ended up happening Friday evening. So I mean, hourly is really well oversold on the hourly, so we'll have to see what happens. But anyways, that's what happened on Friday. That's what happened this week. Not the greatest week. I mean, if I didn't take the two end of the day losses, it would have been a good week, but it is what it is. I just had the right mind set up for both of them, but I think I just I should have waited for more confirmation, but I didn't. So that is the recap, and that's going to do it. So thanks for watching.